Hello Market Club members everywhere. Adam Hewison here coming to you from the digital studios of Market Club, and we've come to the end of a very tumultuous week. It's the weekend before Labor Day and it's going to be a long weekend, so traders are going to get out of town early. Trading will get thin. We have a full trading day in terms of we close at the normal hours today, but the markets are going to be very, very thin, so be careful. But look what's happened here. We are actually lower than we were last week. The lowest close we've had on the Dow. If you just put a close only chart, we'll do that very quickly. Weekly close only. You can see this is a new low close going into the weekend. Not a good sign for this market. You can see our original signal right here at 17,579.27. So it's a dramatic move down. We caught that very nicely. But this is what I want to share with you today. So let's just go back to a daily chart, candlestick chart. And this is the type of formation I'm looking at that I think is going to play out. Here it is. I think this could well be what they call a triangle. In technical terms, it's like this and like this. It constricts, and eventually it should be a continuation one, so it'll break down this way like this, and you can measure from this point here, let's say 17.6 down to 15.4, that's 2,200 points, and from this point 16, let's say call it 16,000, you can measure 2,000 points down from there. So that should take us down to about 14, just below 14,000 on the move down. So that would be the measured move from here to here. So let's see how that plays out. But nonetheless, you're below the 50 line. Things aren't good. All of our trade triangles are red and negative, indicating further weakness. Same picture with the S&P 500. If you just look at the weeklies, we're actually at a new low weekly close on this market. Because you don't take this close down here, it's the weekly we want to look at, how people are comfortable going home. You can see that's a new weekly close. Not good for the S&P 500. Again, everything is red and you're below the 50 line. It can go further, trust me. This is the Nasdaq. Nasdaq's just dipping below the lowest close it had. That we're low below that low now, and it still looks like it wants to go lower. Not a good sign. If you scope this out even further, and we put it back into candlestick terms, and you can see for quite some time since March, but certainly if we go even further back, this is just like it being a big sort of rounding top, big move down. You can see we're below the close we saw here. And that is not a good sign. So I think we'll see this market continue to move lower and certainly test the 4,300 level. The euro dollar continues to try to go higher. We had a monthly trade triangle come in on the weeklies last week. So all of our trade triangles are positive except the daily, which is what we want to see. So let's go back to a daily chart. If the daily turns green, which would be right here, you can see it's actually been negative, but if it turns green, then we want to be a buyer of this, the euro against the dollar. Let's see how that works out. But right now it's 55, indicating a trading range, and you should neither be in or out of the market at the moment. Pretty much the same picture in the crude oil. It's a 55 trading range, but it looks a little more positive to us because you're above the 50 line right here. You do have a weekly trade triangle, so we're only waiting for a daily trade triangle to turn green, and then you can be a buyer of this market because I think it's probably bottomed out around the $38 level. Gold just bouncing around the 50 line, really not clear, but the weekly is positive, which is a good sign. We're just waiting for the daily to turn green and get positive again. These are very choppy markets. Don't try to pick a bottom in these markets. Let the markets tell you what they want to do. This could be a very, very good weekend. Be looking at 52-week lows on stocks, and how you would do that is simply go to our smart scan, and instead of the highs, go to the lows. And you see how it's 25 new 52-week highs and 188 new lows. So obviously they have the majority right there. So let's click on that. And what we're going to do is search, we'll view as bar charts, equities, last price. Let's say it's greater than $20. And let's say the average daily volume, we want to be over 2 million. So we go there, and we'll just do US exchanges, but you can do Canadian and Australian. So US exchanges only, and scan. That's taking it down to 6. So these would be probably 6 markets to look at to possibly go short. This is HCP. It's down 76, but that's a new 52-week low. Healthcare REIT is a new low there. A new low with Ventas and HSBC Holdings. These are all new lows. So if they close at or close to their lows, that could be an excellent chance to go short for the weekend. Hey, I'm Adam Hewison. Enjoy the Labor Day weekend. We'll be back on Tuesday with an update of all the markets, and let's see how things play out. But this is a weekend, which is people will not want to try to pick a bottom and try to even up their positions before they go home for a long weekend. Have a happy and joyous Labor Day. Thanks for watching.